In today's training and educational video, we're going to be covering silver and gold again. We're going to be covering, we've got an article here, gold soars. We've got another article here, silver and crypto soars as well too. You can see here, gold ripping up, breaking higher. And I've got even another article here, gold rallied, the mining stocks are the best way to play it. We've got silver and gold are going through the roof right now. And why this is still, for you guys that are not involved with silver and gold right now, this is a massive warning to no FOMO. I'm also going to share with you exactly what to look for if you want to get into silver and gold to give you a good high probability. I'm also going to be sharing with you exactly what Bitcoin's starting to go through the roof as well too. Where's Bitcoin going and what's happening through there. I'm also going to be covering the cycle of the rise and decline of major empires that happen and why this is happening to America right now, why China is starting to rise. And I'm also going to go into a bit more detail about this. I covered this in yesterday's video, and I'm also going to cover this and the reason why the title of this video, The Great Government Destruction, and why a lot of the government assisted jobs out there are going to be really, really hurt, especially over the next 2 or so years. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. All right, traders, before I get started, make sure you head on down to johnsfreegift.com, johnsfreegift.com, where I'm going to share with you a full complete training that's going to talk about my most explosive and powerful chart reading and trading strategy on the planet. You're going to absolutely love this. If you're looking for a powerful charting pattern to start to apply straight away, then go to johnsfreegift.com and start to get access to that. You're going to absolutely love it. It's super powerful too. Alrighty, traders. Hey traders, John Howell here, and in this video, you got an article here from Zero Hedge saying gold soars to record high at dollars falls. We've got another article here, silver and crypto are snapping higher, so silver's gone through the roof as well too. We've got another article here saying gold rips up to a record book as 2000 test looms for hunt. You've also got another article here from Market Watch, which is gold is rallying. The mining stocks are the best way to play it. There's so much out there when it comes to silver and gold. And I want to say right now, for you guys that are not involved with silver and gold, no FOMO, no FOMO, no FOMO, no FOMO, no FOMO, no FOMO, right? No FOMO. If you get in right now, you are FOMO in the market. Yes, the market can keep going up from here, but do not be FOMO into the markets. If you do, more times than not, especially with silver, it's going to get you, you're going to have your head handed to you. So let's go have a look at silver right now. This is the silver chart, and we can see silver has just been in a massive, massive move up. And the reason why this is a massive warning sign, and I don't know if it's going to keep going up or not, but the market won't just keep going straight up like this. We're going to get a hard and fast snapback real soon. And if I take everything off the screen through here, I want you to notice something. What do you notice about this moving average? This is a 52 moving average. What do you notice about it? When the market gets too far away from it, guess what happens? We end up getting what? We end up getting a bit of a snapback. Do you see that? So we get too far away from it, we have a pullback. We get too far away from it, we end up having a pullback. So right now we're getting pretty far away from it. So if you're looking for a good time to get into silver, right now is the wrong time to be getting into silver. Wrong time. If you're looking for a much more higher probability, at least wait for a pullback to happen, wait for the 52 to catch up, at least you know you're getting into a bit of an equilibrium on that. Makes sense? And also when it comes to support resistance lines, there's a major resistance up here around 26. Silver's just gone absolutely burko right now. And the one thing that you'll realize about silver is that it's a wild cat. So it could be going through the roof right now, but before you know it, it gets slammed in one day. It happens all the time. I've seen it happening so much. And the same thing for when it comes to gold as well too, right? So gold, as you can see, gold only gets so far away from the moving average before we come back to it. So far away until we come back to it. So far away until we come back to it. Now we're exploding. We could continue going up here for a little bit longer. But guess what's going to happen over the next week or two? We're going to start to see some form of a pullback, and the 52 is going to start to catch up, and we're going to come back to a bit of an equilibrium. So it doesn't matter what you think, guys. Right now, as I said before, no FOMO when it comes to silver and gold. Do not be jumping this. If you're looking for a much better time to be jumping into it, Look for that. Now, guys, don't just buy simply just straight on that. Right? Don't listen to anything I say, right? Take your laptop, put it in the pool, flush the pool, run away, all right? But, guys, don't be getting in right now. This is the worst time. A professional trader never, ever, ever jumps in a market after it's been going up for quite some time. That is the worst thing you can do. No FOMO, no FOMO. Be patient, guys, okay? I know you guys are, oh my goodness, I should get in right now. I'm going to miss out. No, slow down. Be patient. All right, there's got to be amazing opportunities just around the corner. That same with the GDXJ, it's gone through the roof. We've got the same for the GDX as well too. It's gone through the roof. Be patient, wait for a good pullback, and then jump in on there. Okay, because I guarantee you, when you have that whole thing of jumping in on FOMO, and leave a comment below and let me know if you've done this before. I have 1,000 houses and 1,000 cupboards full of this t-shirt right now. When you jump in on because you fear of missing out, what ends up happening is that you end up getting in on the high, you end up selling low as well too. Please, guys, please. I'm trying to save you a lot of money here and a lot of stress. Just wait for a much more higher probability chance of jumping in on something. You know, there's a lot of stocks out there that have had a pullback over the last week or so that do look like they're going to have a nice move up as well too. So no FOMO when it comes to you know, these silver and gold. Okay, be patient, guys. Save your money. Relax. Look for much more better opportunities. Remember, you want to look for an upward trend like you got here. You want to look for an upward trend, and then what's the what's the adage? Buy the dip, sell the rip. There is no dip here. We're in an upward trend, yes. Wait for a bit of a dip and then sell the rip. Make sense? Alrighty, so let's have a quick look at Bitcoin right now. I covered this in yesterday's video, but for some reason I cut that visual off. But let's actually go straight into what's happening with Bitcoin right now. We're seeing with Bitcoin is that Bitcoin has done nothing for a long period of time. So we can see all through May, all through June, and pretty much all through April. No, all through May, all through June, and all through July. It pretty much did nothing for all this time. Now it's breaking up and out, as we can see that we had this very big, hard and fast big breaker above this level through here. If I go to that there, we can see it through there. If I go to my weekly chart now, we can see, look what's happening through here. We had a big run up, then we had a pullback. Now look at all this sort of sideways movement. This is what I was saying in yesterday's video, and it's actually interesting. It's happening today. I actually said this in yesterday's video. I didn't expect it to happen today, but it's happening today. We've got all this sort of sideways movement, and now we're breaking up. So this tells me that we have probably a good chance now of at least running up to the next. Let's see if we can do this. So we have a very good chance of it running back up probably to the next resistance level. So I'd say around that 14,000 level. Looks like we're probably on our way now. If I let me bring up say 1 year worth of data. You know what? Let's go to 1 month. Let's go to the daily charts. I'm just trying to get a bit more data here. Let's go to here. Let's actually just minimize that. Let's open this up a bit more. Yeah, so as you can see, we do have a bit of resistance through here, guys, but actually the majority of the resistance is probably going to be around that sort of, probably even up to the 12,000 level is probably a bit of a conservative target. So right now we're breaking up, and it does look like we'll probably have a nice move up to the upside. The problem with Bitcoin is that sometimes it does do this, and what you'll find more times than not, sometimes you'll see Bitcoin make a move and then it'll do this for a bit and it doesn't do anything, and then it starts to make a move. So just be cautious. If you are in Bitcoin, then that's what you can see and expect of what's going on through there. So let's get into the image that the title of this video. And this is something here that most people just don't understand. Now, this is actually from Ray Dalio. This is not from me. This is Ray Dalio, okay? But one thing you can see with what's going on right now when it comes to the typical big cycle of behind the empires and rise and falls. This is what happens over, say, like a 70-year period. Okay, so you can see that how the New World Order started. This New World Order started around the 1940s, 1945s, and then we had prosperity. We had the big debt bubble and the wealth gap happening all through here. Started through here, and this is the big wealth gap through here. Right now, what are we getting? We're getting the debt burst. We're not getting the debt burst yet. And then we have an economic downturn. We are starting to get the economic downturn right here. So we're starting to get into this pointing through here. And we're coming down through this point through here. So we're printing money and we're printing a lot of credit right now, aren't we? So, and then what's also happening is also at the exact same time, see, revolutionary in wars. This is the rise and decline of major empires out there. So this is revolutionary in wars. See what's happening right now. Us and China, we're going at it. So what comes next? Okay, guys, you can be blind to the truth, but what comes next? And this is the reason why I say the great, the coming government destruction is the reason why is because now we're going to have debt and political restructuring. So we can see that this point, what's coming next over the next couple of years is probably going to be a debt restructuring, which means debt defaults and restructuring, and that's not going to be good. Especially, I think China has a lot of, we owe China a lot of money as well too. So, and the New World Order. So I don't know exactly what that's going to look like when it comes to the New World Order, but it's not going to be the same through here. Now, if I bring this other screenshot up through here, this screenshot here will give you a bit more of a guidance on where we are at right now and what's going on. So why I say there is a long-term debt cycle and there's a short-term debt cycle, as Ray Dalio has talked about. The overall short-term debt cycle is this blue line through here. This is interest rates. As you can see, they go up, they go down, they go up, they go down. This is the short-term debt cycle. Makes sense? So we go through an expansion and then we have a little crisis. We go through an expansion, a little crisis, a little expansion, a little crisis. Once again, this is the interest rates. So, but if you look at the interest rates as a whole, I'm going to use the exact, is this blue? No. What I'm going to do is I'm going to use blue here, and I'm going to share with you what can we expect over the next 20, 30 years moving forward when it comes to interest rates. Are we always going to stay low or not? So if I go to a blue, and actually, you know what? Let me actually bring up a black. I'm going to bring up a black here for a minute. And I'm going to bring up the average of what happened. So you can see through here, 1990 to 1930, not much happened. And then we went down to zero. And then 1930 to about 1945, we're around about a bit after that, we actually stayed pretty much at zero. And then what happened after 1945 into 1950, 1960, 1970, 1980? So now we're talking 10, 20, 30, 40 years later, we actually had an overall rise. And then we had, so this overall rise through here, and then we had an overall drop down through here. So if we're looking at this right now, we can see the New World Order started here. New World Order started here, which is around that 1945 or something like that. After 1945, that's when the New World Order started. And then we started to see this interest rates overall creeping up again. They're not going to stay at zero for a long time. So you can see the overall pattern. Now, once again, as I said before, you have these little small rises over the 4 or 5 or 6 year period, then a drop. Rises. This is just the natural short-term debt cycle. Makes sense? Which means we have an expansion. We have an expansion, so they raise interest rates to cool it down. Then we have a little recession, and they drop it to pick it back up. Then we have an expansion, they raise it back up. Then we have a recession, they drop back down, and then we have even a bigger recession, and so on and so forth. So that's what these dips through here are, through there. And that also, it goes inside with what? Property market. So the property market, obviously when the interest rates are dropping right now, they're starting to create a bit of a floor in the property market, and then we start to see a rise. And then after 2 or 3 or 4 year period, then we start to see a bit of a boom in the property market. So they start to raise interest rates, which starts to hurt it. And then you start to get something like this overall in the property market as well. Makes sense? So we can see this is the overall here. So right now we're at the 2020. So I would say around about 2025, we're probably going to start to do something like this, say 2021, 2023. I would say around about from now to 2025, the interest rates are going to stay zero. And then they're going to start to do what? Then we're going to start to overall start our climb over the next, say, 30 years. We're going to start doing what again? There's gonna be a big restructuring, and then we're gonna start to do what? We're gonna start to go through a new world order, a new way of doing things. But we're gonna go through the short-term debt cycle once again, which simply means what? Which simply means we go through an expansion. When we do, they're gonna probably raise interest rates to cool it down. up through here, and then we go through a bit, and then when we do that, it's probably going to cause a little recession. Then we drop it to cool it down. Then it picks back up, and then we rise it to cool it down again, and then we go through another recession, and we drop it down through here, drop the interest rates and start pulling it back down, and then we go through another recession. We go back up through here, and so on and so forth. And we do that for probably, what was this here, 1950, 60, 70, 80. So that was 40, what's that? Yeah, 10, 20, 30. So that's 30 years, 40 years. Am I getting that right? 10, 20, 30. Roughly 30, 40 years. I can't do my math properly. So this is the interest rates overall, and what's likely to happen with the interest rates and where we are going overall over the next 30 or so years. And so where I say the great government destruction is that now let me take everything off the screen, and now I'm going to switch it over to the red line, and let me zoom right in on this red line here for a minute so we can actually see what I'm trying to share with you here. This red line here is what? This red line here is obviously the printing of money. And so you can see what happened back here in the 1930s. So we had 1929 crash, and that triggered what? 0% interest rates, printing of money. And that happened for about what? Around about 15 years. So 1929 to around about 1930, we kept, let me just do this through here. We kept doing what? We kept printing. Let me go through a bit of a raw fix here. So guess what? After that, that's when we started printing a lot of money, didn't we? For about 15 or so years, we did that. And then it got to a point here where we had to start doing what? It was, and as I was saying before, if we go to this screenshot back here, look at this. This is the debt and political restructuring. So right now we're going through the revolutionary and the wars. They're printing a lot of money through here. And now, where are we at? Now we're at the debt. Now we are at the debt and political. We're going to be getting to the debt and political restructuring soon. And the New World Order is going to be starting soon. So New World Order is probably going to have a lot to do with China as well. So we can see by looking at this point through here that 1930 went through the same thing, that we had a big move up, and then we did what? Then there was a lot of pain, a lot of debt restructuring. Now, when this debt restructuring happens, guess what? The people that when the government has promised to, the bonds, when the government has promised to. When the government has promised to, to pay people what they owe them, they're not going to do that. They're going to restructure their debt. They're going to default on their debt, essentially. And what's also going to be happening is because government-assisted jobs throughout this time. So we have, we're going to have pensions because that comes from the government, healthcare. All those things are going to be a squeeze over the next, say, 2 to 4 years. There's going to be a massive squeeze on that because the government won't be able to do that. And especially the baby boomers are gone through the roof. And even Robert Kiyosaki, talks about like who stole my pension, his book. And so when we're looking at that, we can see at this point through here, this whole from 1940, maybe close to 1950, this actually took quite a bit of time. So this whole restructuring happened over about a 10-year period. And this is what they call what? This is what they call through here, pretty much the lost decade. And all through there, it was actually pretty much the lost decade, and then we started. It was probably 1940, wasn't it? Until we started to see a bit more of an expansion through the market through there. So we can see the same sort of thing that's happening right now. We're getting close to that point. We had it was 1929, 1930 that they rose, and around about 15 years later they had the debt restructuring. Right now we're 2010 to 2020. So I would say by the end of 2025, and I would say probably over the next couple of years, maybe 2 or 3 years, we're going to start to see those things. We're going to see this debt here once again. If I change my little debt, we're going to start to see something like this here. We're going to see a bit of a move up. We're going to see an explosion in the debt, and then we're going to see a debt restructuring coming down through to here. And when that happens, that's where you're going to see, once again, your pensions. So people that are relying on pensions are not going to get as much as they want to. People that are relying on healthcare, that's going to be a squeeze. People that have government-assisted job, because the government won't be able to do it. They're going to default on a lot of things. So as you can see that throughout history, ever since from here, probably for the last 70 years, that governments have been there to support and help people because they can. But as Ray Dalio talks about, which is the long-term debt cycle, that when we get to the long-term debt cycle, and the long-term debt cycle just simply means, let me bring up a green through. Let me bring up a green. The long-term debt cycle is this here. We have the short, we are there, then we have a boom, and then we go through a massive boom down through to here. And as you can see, the long-term debt cycle simply means now we're going through this here on the interest rates, and now we're up through here on the debt. We're now over the last 70 years, we've gone through all this, and now we're going through, now we're exploding right at the very end. And what's likely to happen is, once again, is we're going to see the debt restructuring. And for you guys that are going to rely on this, you know, I just pray and hope that you have something behind you, or you start to save a bit more behind you, because the government's going to keep printing more money, and they're going to throw whatever they can at these markets, and they're going to throw whatever they can to help things go. But that's just going to create things worse and worse and worse. So you can see what's going to happen, guys, over the next 5 or so years. There's going to be pain over the next say 2 or 3 years, I believe. There's going to be a lot of pain, and especially when especially when you start to see the debt having a very, 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 very big strain on there. So the greatest salesman, Trump, is coming out and saying that we're going to have an amazing year next year. I don't think about that. Maybe the stock market will have an amazing year because the government just keeps going out there and keep basically propping up the stock market. So the stock market basically the stock market is going to have nothing to do with what the actual real economy is going to do. And if the government just keeps buying it and buying it and buying it, and they keep printing more money, then it's going to be, again, that's why I titled everything that I'm saying through here is the coming government destruction. And that's where everyone that's been relying on government assistance, even people that are unemployed, that have unemployed assistance, they call it the dole over here in Australia, or, you know, all those sort of things are going to be affected. And this is going to really, really, really hurt the economy. And this is going to create a lot more homeless people, because they just simply won't be able to support that. Now, on the other side of this, guess what? Now here comes a new boom, and we're going to start another boom for another probably 20, 30 years, 40 years. And the cycle is going to repeat as well too. So in the short term, guys, this is going to be bad. Now, if you're a trader and you understand how to trade the markets, guys, then this shouldn't bother you at all, because either way, there's going to be amazing opportunities. I was doing a coaching session with my coaching clients today, and I was saying, listen, guys, that, you know, you can do so well out of trading if you know what to look for. So the bull market, bear market, I don't care. But on the big picture, for you guys that are relying and are going to rely on the government, it's going to be really, really bad for you, because you're probably going to get 50 cents on the dollar of what you expect when it comes to government assisted somewhere down the track. Even doctors, you know, any government job is out there is going to be under threat. Pensions, healthcare, all those sort of things.